All right, I think we're going to go ahead and get started. Feel free to keep eating, but we want to just kind of get the ball rolling here. All right, guys. Well, thank you everyone for coming. First of all, I know it's a long drive. It's a weeknight. Everyone has kids. I get it. I have 5 kids at home, and my wife's out of town, so I made it work. But thank you all truly for being here. Honestly, this dinner and event is just to say thank you, really. Thank you for people that have invested with us, that have partnered with us, that have worked with us over the years. Just kind of want to say, thank you so much for everything you do for us, and hopefully we have many opportunities in the future to work together. So, my name, by way of introduction, is Clay Rockwood. I'm one of the co-founders of Soar Capital Group. Let me grab the clicker here. I actually want to bring up the team, if we can, real quick, the Soar Capital team, just so you guys get to know everyone, and we'll just kind of make introductions real quick. So, if you work for Soar Capital, please come up here. And I'll just make quick introductions. And again, I don't want to drag this out, but and feel free to keep eating. Go and get more food if you'd like. So right here, this is Brian Martineau. We've been partners for several years, about 6 years, on multiple different businesses. Utah House Buyers. We own a nightly rental management company. We've done a lot of business together and had a lot of ups and a lot of downs together. So it's been great with Brian over the years. So we together, Brian works with me on the capital raise side, investor relations. So you may already know Brian or may hear from him as we are raising capital on future deals and things like that. Andy, did Andy come up? Yeah. Oh, Andy's right here. Andy's the silent partner. He's one of the partners of Soar Capital, so I just want to acknowledge him. He's kind of behind the scenes, but has, again, been a partner with us for several years. So come get to know Andy. He flew all the way from Texas to be here, so thank you, Andy. This is Santiago. He's our project manager, asset manager. He kind of helps run all the construction. You'll hear a little more from him tonight. He'll talk about kind of an update on our last deal that we did. He's been with us for about a year. Awesome guy, really smart, really organized, and structural engineer by trade, right? So he's got a diverse background. And then we have Reagan here. He is our acquisition manager, so he kind of helps source all of our deals. He's working with brokers, directly with sellers, underwriting our deals. He's kind of, again, behind the scenes on our acquisition side, finding us the deals that we find and making sure they're good opportunities. So we're super grateful to have Reagan. And then Dustin here is he's another member of Soar Capital, is on the leadership side and ownership side. He also works in acquisitions, underwriting, lending. He's basically our COO, right? He runs the shop. So we're super grateful to have Dustin here. And you'll hear from some of us tonight as well. I just want to make a quick introduction. Last but not least, Hallie. She is a rock star. She runs the office. She's our executive assistant, office manager. She's amazing. Couldn't do it without her. So anyway, thanks, guys. Just want to make an introduction, so feel free to introduce yourselves later. All right, real quick, you may have seen on this table back here, we just have some swag. For those that have invested in our most recent deal, the Lassus Townhomes, you'll see you have little name tags there. We have some hats we had made up, some melon hats. I don't know if you guys know the brand, but with our logo on there, so that's a pretty cool little piece. And then this random thing, I know it's very unconventional, but we got a brick. Okay, a brick. Lassus Townhomes 2022 Soar Capital Group. This idea I just kind of liked because I'm always about building wealth. This is a journey to build wealth. That's why we're all doing this, right? Why are we investing in real estate? Why are we putting money into these assets? Well, because we want to build our wealth, and that's what we're here to do. That's one of our missions at Soar Capital, is to help you as investors, you as our partners, to build wealth. So this is your first brick, or one of your many bricks that you're going to get when you invest with us to start building that wealth. So if you have a long flight, like Andy, good luck taking this back. And then for other partners that aren't active investors with us, we also have some swag, some hats and socks and stuff back there. Hallie, if you need other sizes of hats, we have different sizes and styles, so just talk to her and you can swap those out. So feel free to grab those whenever you'd like. I'm going to turn the time over to Brian.
Hey, what's up, everybody? Again, my name is Brian Martineau. I just wanted to talk to you guys for just a few minutes about our core values and our mission statement within Soar Capital, But I wanted to start out by saying I just recently read the book Good to Great. Has anybody ever read that book before? Amazing book. In the book, it talks about core values and level 5 companies. These are like top, companies that have scaled to the next level, companies that most companies aspire to go to be someday. And within this book, it talks about level 5 companies. They have, one of the things that sets them apart from other companies is that the employees, the executives, everybody within the company truly embodies their core values and their mission statement. And so, for us, that's really important, and it's really important for you guys to also know what our core values are and what our mission statement is within Soar Capital. And forgive me if I say Utah House Fires again, because I do that quite often. Anyways, it's important for you guys to know that because we want you guys to hold us accountable to these. And we want to earn your trust through these core values. We want to embody these as our company. And anyways, to go off with, from there, I just want to say that our mission statement is providing clean, safe housing for our residents, stable, passive returns for our investors, and growth opportunities for our team. For those that are here today, this is, where the opportunity comes for you guys is stable, passive returns for our investors. That is what, that's why you guys are here tonight. We want to make sure that you guys understand that with these deals that we have coming up and that with the deals that we've recently closed on, we want you guys to feel that these are stable, passive returns, truly passive for you guys, okay? And then our core values, what we embody as a team, grit. What we mean by that is get it done mentality, overcome all obstacles, solutionist, don't just pass the problem to the next person, bring possible solutions for every problem you encounter, extreme ownership, take ownership of your wins, losses, and mistakes, candid communication, be open and honest with your thoughts and ideas, and fanatic discipline, do the daily work you know you need to do. So anyways, since we started Soar Capital up till now, you guys have probably got a lot of phone calls, a lot of emails, a lot of texts from us. We want to continue to show that we embody these type of core values as a team. And we want you guys to really hold us accountable. We want you guys to really feel that we believe in these and this is what we represent. So anyways, turn the time back over to Clay.
Awesome, thank you, Brian.
We just want to talk a little bit about Lassus again. Everybody's very familiar with the deal, I hope, that's here, those that invested in the deal, but just wanted to give a little bit of backstory on it. So how, when, and why? So why did we go after this deal? So how we found it was through a broker, pretty standard, somebody that actually, so this is our first deal in Texas. So it's through a relationship that we had created with a broker there. And when we started looking at it, so this one was a long one as far as the deal process goes. So we started looking back in May. So it first was presented to us in May, and it took us 7 months to close on this one, which is not very typical. Paul, he's sitting right here, can attest. He was in the trenches with us. He's our mortgage broker right here. And a lot of back and forth with the seller. It was back when interest rates were good when we first started looking at the deal, and then mid-deal interest rates shot up. So we thought it was a done deal. It was gone. We had to renegotiate. The seller came back and was very flexible with us, and we actually renegotiated it down by $500,000 from the original purchase price. So turned it back into a deal, but it was just a very long, drawn-out process, back and forth. And so a lot of sweat went into this first deal, which I hope does not continue. I hope it becomes very more simplified and streamlined moving forward. So that's the process when we first looked at it. And then now kind of the most important, the why. So the market, San Antonio, great market, kind of met our market criterias. Not a very big lift, heavy lift as far as the rehab goes. So for a first deal in a new market, you can see, so a lot of the units actually look like this. So I physically walked through a lot of the units, and they look just like this. So not a super heavy lift on the front end. And then also they're townhome style units, which sets the asset apart from others, attracts a different style of tenants. So that had a lot going for it as well, and obviously the numbers made sense. So we're actually about to hear from Santiago. He's going to give an update on where we currently stand with the property that you guys invested in. And I just want to say thank you. I know Clay said thank you already, but thank you so much for investing with us, and again, look forward to future deals. So I don't know if I
Yeah, just go to
Santiago, if you want to come up.
Hello, everybody. How you doing? My name is Santiago. Just like Clay said, I'm a structural engineer. So back in 2016, I went to, please don't use your bricks when I tell you where I graduated, BYU. I know. So I graduated BYU with my master's degree in structural engineering. I practiced structural engineering for about 7 years. I started with residential engineering, and then after that, I moved into more commercial buildings and multifamily buildings. So I'm happy to be with Clay and Brian now. I decided to shift away from my profession to start building a legacy with them, and it's been an incredible journey so far. Happy to tell you a little bit about our project. So with LASIS, obviously the goal of us, our goal is to help you get more money and build that financial stability for you guys and a passive income. The way to do that is to renovate, to add value to the property. As you can see, this is our scope. So we have a lot of things that we want to do to the units to increase the rent and give you guys better returns. So currently, what we've accomplished is we went through and renovated or ripped out and replaced the roof for all the buildings. So this is kind of shows you the state of how it was before. There were some areas where there was quite a bit of damage with the roof, which created obviously some leaks on the interior of the units. But we've already worked with great contractors, and they've replaced the roofing for all 6 buildings. So we should be good to get inside and renovate everything to look great. So we've also went out to another slide. Okay. So we're working right now with property management. They've gone through the interior of the property, and we've created inspection reports for every single property so that we can very accurately estimate the scope of the project for the interior renovations. So that's I guess the next steps. Our next steps is to finish, obviously, like start the exterior renovations, get the scope for the interior renovations, and get those going as soon as possible, and obviously like meet the standards that we've created as a company to create a great product.
Awesome, thank you, Santiago. So yeah, just kind of wanted to show what's happened so far. I mean, we just closed on this asset not too long ago. I just want to show that we're actually actively doing what we said we were going to do. To me, that's important. As an investor myself, I've invested in other deals with other companies. It's important that we show you that, hey, we're actually doing something, and we're going to make it happen what we promised we were going to do, right? So anyway, just want to kind of throw that out there that, yes, Santiago's on top of it, and we'll keep giving updates. The goal is to be giving you guys monthly kind of updates, newsletters as what's happening with the deals and projects, not only this, but future deals as well. All right, so real quick, I'm not going to spend a lot of time on this. For those who have invested, or I've got a lot of questions on the InvestNext software or portal. I'm not going to dive too deep into this. You can reach out if you have questions, but I just want to show what it looks like when you log into the investor portal, just so you know, at all times you have access to all of your documentation, to, if you want to see what documents you signed or if you need them for tax reasons or whatnot, it's always in there, always accessible in the portal, or you can reach out to us and we'll send you a copy. Also, in the portal, you'll be able to see our future offerings, and we're going to talk about those here in just a second. We've actually just today put the next couple deals that we're doing in the portal. So you can log in there, look at the executive summary, see the target returns and everything like that. We'll talk about that a little tonight, but at any point you can log in and see that. Also, you can This is where any documents will be uploaded for tax reasons, like K-1s. Some people have asked, hey, when do I get my K-1s? It'll all be uploaded in the portal. We'll send out, reminders and emails when those are accessible and available. But everything is done through the portal. So feel free, if you guys have questions, to reach out to us. I did want to point out, also, when we start doing our first distributions, we'll need your ACH bank account information. You can actually upload all that right in the portal. So we don't have to chase you down and get all that paperwork for you. Just once you log in, go to the settings tab down to the linked bank accounts. You can just put in whatever bank account you want that money to come into, and when we do distribution, it'll just ACH right into your bank, okay? Any questions there? Okay, cool. Well, let's dive in, guys. I don't want to keep you guys too long. Just want to talk about our kind of upcoming opportunities. So we open this up first to our past investors or future investors that we're working with that are part of our investors club. So I'm going to have Reagan and I guess Dustin can come up too, and we can all three kind of talk about these next opportunities if you're interested. Actually, on your table there's a QR code. I think there's 2 QR codes back to back, but if you're interested, you can scan that and it'll bring you to the full executive summary on these deals. But we just wanted to present these deals tonight briefly, and then we're going to do a webinar about these later, but just kind of want to introduce this opportunity first. So I'll pass this over to Reagan to talk about the Verve apartments.
All right. This is the fun stuff to me. This is all the zeros and ones that make us all a lot of money. So this is the good stuff. The Verve is a super unique apartment complex in Baytown, Texas. A little bit closer. Can you guys hear me now? Sorry about that. It's in Baytown, Texas, so it's a suburb of Houston, about 30 minutes east. What happened here with the Verve, someone purchased it in 2019. They got all of the renovations done, so new flooring, new paint, new resurfacing the cabinetry, new countertops, everything nice, new, and pretty. And then COVID hit, and they had a ton of bad debt and ended up actually losing the property. So we're actually picking this up from Key Bank as a repossessed asset. And so that gives us a really cool opportunity because we're getting it way below what the market value would be. So kind of just running through some of the numbers, it's a fixed 56-unit deal at purchase price of $4.3 million, so about $76,000 a unit.
If you want.
Oh,
Pointer.
We'll have total raise right about $1.3 million in a 3-year hold. This should give our projected 20 to 21% IRR and a 1.68 to 1.78 equity multiple. Now, the nice thing about this is it's really more of a management play. As you can see from the interior, I know these pictures are kind of small, but everything's already renovated and done. So really what we're more doing is just coming in, putting new management in place, and because the banks aren't really set up to manage this property, they're paying like $200,000 just in salary for a 56-unit property that only needs a part-time manager. And so really that's the biggest thing here is just taking the financials and getting them straight. It's not going to be a massive overhaul. It's going to be a really easy lift, which is great for a first deal in Houston.
Yeah, any questions, guys? I know there's a ton of numbers on here, but again, if you want to scan the QR code, you can look at the full executive summary. And like I said, we'll be doing a webinar next week, and we'll talk a little bit about that. But yeah, this is a great opportunity. What I love about this, on top of what Reagan just said, is this is a foreclosure, right? It's a great opportunity, unfortunately, for the previous owner that lost it, but it's a great opportunity for us to come in at an asset that's roughly 80% occupied and fill the vacancies, raise the rents to market rents, get better management in place, and turn this around within 3 years. And these are the kind of deals we love to do. We do day in and day out because, again, we're always targeting value add, right? In some capacity, whether that's renovations or like Reagan said, where we just increase the operations of the management, we're always looking for the best opportunities. So I feel like this is a great opportunity. I don't know if you mentioned this. It's right outside of Houston. It's a suburb of Houston. Great market, great location. So if that interests you, again, at the end of this, the end slide, I'll have, the QR code. Sorry, we already talked about that. So you can learn more right in the portal. You can do a soft commit if you're interested, or join the webinar when we give that and ask any questions you want about this opportunity.
So this is a new asset class, I guess. It's obviously not a new asset class, but for a lot of people, we talk about apartment complexes, but this is actually a mobile home park. And this is the asset class that I love, this is a sexy deal for me. You know, like I look at an apartment complex and it's like, whatever. But mobile home parks, as ghetto as they could potentially be, I love this asset class. But that's not what we're going for here. So again, we're looking at value add. So this mobile home park, again, Reagan's going to kind of go into more of the details of it. But what I wanted to talk about is why I love mobile home parks. And I don't know if you guys have ever invested in a mobile home park. I'm sure everybody's heard of a mobile home park, but it's very dynamic. It's very flexible as far as how you can operate the asset. You can run it like an apartment complex where you own every single house in the park. It's called a park-owned home, and you rent out that home. Or you can run it like a mobile home park, like a lot of people think, and you rent out the land. So they own the house on the land, and then you're charging them rent for the land. So there's two possibilities there, and oftentimes it's a mix between the two. So with that brings lots of opportunity. The other thing that I love about this asset class is it's not a lot of, it's catching fire, I'll put that. So a lot of investors are starting to realize the potential of mobile home parks in general and are starting to seek them out, but it's not to the point where it is an apartment complex where you have these large companies coming in and scooping them all up, but it's in process of, because they're so stable. So anyways, there's a lot of opportunity in this asset class because we can still go directly to seller, and that's actually what this one is. It's an off-market directly to seller, and has a lot of opportunities. And I just wanted to point out too, another reason why we look at this one in this particular market is because we do own several mobile home parks in the area already. So it just makes sense for us to add to that portfolio. So I'll turn it over to Reagan here, but he's going to go over more of the nitty-gritty on it.
Yeah, so like Dustin said, we got this deal in our range probably about 5 months ago now, maybe. The person that brought it to us has been working on the seller for roughly 2.5 years, and the seller's finally ready to let go. So something that's kind of unique about this property, you can see from the picture here, there's already all the trailers in place. Typically when you buy a mobile home park, you'll have 20, 30, or 40% of the lots completely vacant. With this one, all 105 lots have a trailer on them. Only about 55 of the trailers have tenants in them though. So we already have the houses in place to sell to tenants so that we can get 50 new people in there without having the expense of bringing in 55 new homes and all that comes along with that. So really it's just already set up for success. What it needs though is just a professional manager. Right now it's an older gentleman that runs it all by himself, and so it's more of a management play there. So just, quick numbers on this. Purchase price, 1.682, 105 total lots. So we're getting that for $16,000 a lot. Typical in this area, in that market, is to sell a park that's 50% occupied for about $32,000 a lot. Because we're able to go direct to seller, we're getting a massive discount on this deal, and it shows in the returns. So you should have projected returns 22 to 23%. IRR with a 2.9 to 2.29 equity multiple on a 4-year hold. You can see kind of the uses of capital there. We're come in, update any of the trailers that need to, and make sure they're in a good spot. Another thing to notice here, current rents are about $340. We are looking at another park that's only 12 miles away. It's stabilized. They're currently commanding $450 a month for lot rent. So we're at least $80 short a month that we can start boosting rents year one, and we have proven comps in the area that support that. The last kind of piece on this is it's actually in Kentucky, but right next to Cincinnati. So we're 15 minutes from downtown Cincinnati, but we stay on the Kentucky side, so we get the tax benefits and the friendly landlord laws, and stay out of places that could potentially be otherwise. But besides that, it's an awesome deal, and we should be closing on it here in the next couple months.
Anything else? Awesome. Thank you, guys. Well, yeah, I just want to highlight briefly, again, don't want to bore you guys. Oh, go ahead.
Question, why the high vacancy rate there?
He's asking why the high vacancy rate.
So as we're talking with the seller, I think it's just, like I said, he's an older gentleman that tries to manage the entire park by himself. And he just kind of doesn't have the time. He's also a lawyer, and so he says that his park just kind of struggles by the wayside. And just, he added like 5 tenants in the past couple of months. And so we know the demand's there. He just doesn't devote the time to the park that you would need.
What's your vacancy rate on that, trailer parks around the area?
Trailer parks in the area.
The ones you guys are.
The ones you
Oh,
own.
the ones that we currently have, the portfolio. You're talking about our parks here? Yeah, yeah.
Oh, so it's, yeah, so so we're looking at a portfolio in that area as well. So that portfolio, I believe they're at like 98% occupied, and that's like 12 minutes from this park.
What about your
So
portfolio?
the other portfolio here, again, we're kind of in so this is Indianapolis. I know it's kind of small, but Indianapolis here, Cincinnati, it's pretty close, close. We're 100% full here. Here we're like at 95%. I'm just kind of off the top of my head here. This one we're in the 90s as well. Then another one we're probably like 50, but it's more of a value add. Again, we're working on increasing the occupancy. Yes. Yep.
Yes, and I should clarify, the park that I was talking about that's also in Kentucky right next to Cincinnati, we don't currently own. We're looking at the portfolio. It's 300 lots across Kentucky. But the one right next to this one is the most occupied at 98%, collecting $450 a month. So really it's just a management play here and cleaning the park up. A lot of times owners don't put any money back into the park, especially in these situations. And you might look at a mobile home park as low class, but to the people that live there, it's still home, and they want it to be nice. And so when we come in and put value into the park, do some tree work, upgrade the roads, make sure the laundry room and stuff like that look good, tenants see that and they're willing to pay more. Something I failed to mention here that I do think is super important is just the recession resistance of a mobile home park. When you start talking about shifting markets, there's nowhere someone could go that's cheaper for a 3-bedroom, 2-bath home than this park right here. They could get into that, and you could essentially put, a 5, 6, 7-person family in one of these homes and be staying under $1,000 a month, under $900 a month for your total payment. So when we talk about shifting markets, this really is the perfect place to be because it's very, very recession resistant. Do we have any other questions about that? Sorry.
Oh, you're good. Awesome. And like I said, we're going to do a full webinar on each of these properties where you can ask more questions. We're going to deep dive in. This is just a condensed summary. We have a full like 10, 12, 15-page summary on each of these properties. So if you want to learn more about that or why we like these deals, we're going to dive in at another time. Cool, guys. Oh, yeah. So here's those QR codes if you want, but they're also on your tables. You can learn more about those. That's it, guys. So we're going to send out an email tomorrow with a link to these webinars. If you're interested in these future deals or someone that may be interested, like, hey, I got a buddy or I got a family member that may have some money they want to put to play, feel free to send them the link. Would love to have them. Again, our goal here is to help our investors gain passive returns with their money, right? And all the tax benefits that come along with that, right? The depreciation, accelerated depreciation, et cetera. So this QR code actually takes you to our website for our investor club. If you're not part of that, I would recommend you just join in because basically that'll just give you first access to all of our future deals. If you haven't invested with us, please join the club. I say it's a club, but there's no fee to join the club. You're just part of the club when you sign up, okay? It just gives us access to your information. That way we can start sending you deals. All right, guys. Well, thanks. That's it. If you have any future questions, I'll leave this up here. Brian and my information is there. If you guys want to reach out to us or if there's anything we can do to help, please reach out. Again, go grab some swag, mingle, hang out as long as you'd like. We have this room till 10 p.m., so you can stay as long as you